Have you heard about the news regarding the Tata Sons IPO and Tata Sons selling its stake in TCS? It's making quite a buzz again, and whether you're already invested in Tata Group stocks or just curious, it's good to know the details. So let me break it down for you. But first, let's understand about Tata Sons and their business. Imagine Tata Sons as the head of the Tata family. It is the principal investment holding company and promoter of the Tata companies. It holds stakes in well-known companies like Titan, Tata Motors, Tata Chemicals, Indian Hotels, etc. Tata Sons lets each company run its own business independently. Now, how does Tata Sons make money? When these Tata companies make money, they share a portion of their profits with Tata Sons, like giving an allowance. This is often done through dividends, like a share of the profits. For example, in financial year 23, Tata Sons received rupees 35,000 crores in revenues, with 95% coming from these dividends. A large part of this comes from TCS, the most profitable company. Once this money arrives, Tata Sons can use it for various purposes. This includes funding new ventures in promising sectors and providing financial support to existing group companies in need. For instance, it utilized funds for the acquisition of Air India. Additionally, it injected significant capital into Tata Motors few years ago during the automaker's period of struggle. Additionally, they oversee the overall strategy and direction of the Tata Group. Moreover, Tata Sons might also invest in other companies or assets beyond the Tata Group, generating additional income. Now, why do people believe Tata Sons IPO will come soon? Tata Sons IPO has been in the news once again. However, there is no official confirmation of the Tata Sons IPO going live. But here is the reason why most people believe that the IPO will come soon. Let's break this down. So Tata Sons finds itself in this situation because it's been classified as an upper layer non-banking financial company since 2022 according to the RBI's framework. This framework basically sorts NBFCs based on how complex they are and how much of an impact they could have on the overall financial system. As a part of this upper layer, Tata Sons faces stricter rules and regulations to prevent any systemic risk. This comes with another caveat. Tata Sons would have to be publicly listed on the stock exchange, and the deadline for this to happen is September 2025. Now, despite this directive, Tata Sons isn't exactly jumping at the idea of listing. In fact, Tata's had also approached RBI seeking the exemption to the listing rule, but the plea was rejected. There are a few reasons behind the reluctance. First off, as a private limited company, they have a lot of freedom and flexibility in making decisions. But if they go public, they'll have to follow a bunch of new rules, like being more transparent about their finances. This could slow down their decision-making process and make it harder for them to take risks or make big moves. Another big concern is how listing would change Tata Group's ownership and how decisions are made. The company is to free itself from the upper layer status. Again, it won't be easy, but on paper it is possible. For that, the company has to repay all of its borrowings. Also, it has to move its financial services firm Tata Capital into another subsidiary. Based on the latest news, the company seems to take the first route. Now let's understand why Tata Sons is selling some of its shares in TCS. Tata Sons has borrowings worth over 20,000 crores rupees. If it brings down the borrowings to below rupees 100 crore level, it could no more fall under the RBI CIC rule ambit. So in the recent news, Tata Sons is offering to offload as many as 2.3 crore shares in Tata Consultancy Services, worth about rupees 9,300 crores. The selling stake by Tata Sons could be the start of a fundraising exercise to reduce its debt at the group level so that it can avoid the mega IPO. But here's the thing, they haven't officially said why they're selling these shares. We're all just guessing at this point. And there's a deadline approaching. They've got about 18 months to sort everything out and make sure they're following the rules set by the RBI. So it's a bit of a waiting game now. We'll have to see what Tata Sons does next and whether they can meet that deadline. Having said that, this is Aditi Priya signing off.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.